Guys, good morning. Welcome back to another episode of NGMI Trades. It has been a bloody 24 hours for the markets. So let's get straight into it. We've been talking about this rising wedge for the last week or so. We went in depth on it on the last episode, and we said one of two things would happen. A, we would see a 5 to 10% move either to the upside or the downside, because you have to respect the wedge. The wedge formation is one of the few things in TA that I really do think you need to pay attention to. And that's what we've seen. We've seen a very aggressive move. We also called that the move would be to the downside. Now, why was this? Let's have a look. So guys, quite simply, equities. As per this tweet. Unfortunately, the reality is equities keep giving Bitcoin the chance to break out, and it's simply not taking it. This is the first time since accumulating since June that I'm considering options. Always retest your theory. A correction in equities will nuke crypto here. We're going to go and look at equities, but that is exactly what happened and why we find ourselves where we are. Right, August 17th. Next. So, tweet number 2. Released later that day, August the 17th, but pre the US Open. Equity futures were already down. Bitcoin was already moving lower. And as this chart shows, losing this support line. Now, once it lost that support line, the move lower was very, very aggressive. We'll go back to our chart, but if you look at that, it really is a small move lower, but it's lost that support line. What happens next? We will see. A big red candle. So, we called this. It's played out as we expected it to. The question is, what do we do next? Let's go and have a look at SPX. So SPX closed on Friday, 4,228. Straight through the first support line of 4,250. So we're now looking at 4,200, 4,100 as support levels. In reality, 25 points lower from here, 4,200 would constitute a Bitcoin level somewhere between 20 to 21k. That would be my prediction. Now, there is a good chance we find support there and bounce, but it is not my base case. My base case, unfortunately, is another 100 points lower to 4,100, which would constitute a 3.5% move lower from this area, not from the peak, but from I think it was 42.90 when I was working this out. Anyway, 4,100 would be my base case, and unfortunately for Bitcoin, that would likely constitute a sub 20k Bitcoin. Now, why is this happening? What is the relationship? Quite simply, Bitcoin has not been upholding its side of the bargain. As the higher beta asset, and higher beta is basically just a posh way of saying the riskier asset, what that means as the higher beta, higher risk, whatever you want to call it, it should outperform on an upside move and underperform on a downside move. You get rewarded on the upside move for putting your chips in the casino on the higher risky asset, but you also lose on the downside move. Now, Bitcoin has not upheld its side of the bargain. This is the Dow Jones through August. Upside move all the way until the last few days. 16th of August we start finding, obviously we hit that top level, and then we've seen some weakness. Bitcoin, rather than trending above this and putting in 5-10% gains, has actually done the opposite. It has either ignored upside moves altogether, or the slightest bit of weakness on this momentum, this 1 month of momentum, the downside moves it's reacted to. And that can be seen super clearly in this part of the chart. So the last 10 days or so, particularly this week. And you just don't want to see this. And this is worrying, because the weakness and the lack of volume in crypto at the moment is what's driving this. People are scared. People are looking at where we are in equity markets, and they're just taking their chips off the table in crypto. And that is worrying. But look, guys, this channel is about preparing for every eventuality. We've ridden this move up since June. We've been DCAing into this risk move since June, July. We took money off the table last week, which was the correct call. What do we do next? So, Bitcoin here. We've obviously 25k local top, 24k down to where we are now, 21.3. Very aggressive move. Now, this area here, so the 21 to 20k area, as this chart says, this area looks sensible for risk taking. 2021k. It will be reached if SPX hits 42,000, as we've already said. Not financial advice. So yeah, I think if you've taken money off the table, this would be a relatively sensible place to reapply risk, in the full knowledge that equities are our master. Equities decide crypto's fate here. So we're looking at 4,200 SPX next week, and we're looking at 4,100 next week. If we lose 4,200 on SPX, we will lose this support line, or we'll lose 20k in Bitcoin. It's almost a certainty. So bear that in mind when you're taking risk. That's what I'm looking at, and I'm happy to cut a position if I need to. I lose a few $100. C'est la vie. Ethereum. Let's go and have a look. So on Ethereum's move lower, the first area of confluence that we were looking for support was the $1,700 to $1,750 level here. We held it for a little while. I'm going to say a little while, a few hours, and then we aggressively broke through to where we are now, 1,650. Interestingly, and we're going to go and look at this, the ETH-Bitcoin relationship is still holding up. It's come off a little bit on the move lower, but not as much as I thought it would do. Now, really, 1,550 to 1,600, which we're only $50 away from now, is probably a decent level for re-entry if you're looking to pick up Ethereum. But again, we're only $50 away from the top of that. If you're looking at 1,550, $100 away. A move down on SPX next week to 4,200 will definitely take us to the bottom of that, so 1,550. A move down to 4,100 on SPX, we will lose that, and we will come lower. So something to bear in mind. These are spurious lines on a chart to a certain degree, but you are looking for these areas of support, and I think this is a decent level to look at if you're looking to pick up risk. There is a lot of pain. There is a lot of hyperbole out there. There are a lot of donkeys out there on YouTube. I know I'm one of them. That are chucking around silly claims as usual. I just like to keep things in perspective. And we're going to go and look at the macro side of things again, as we've been looking at for months. So not to get too overly emotional about it. It is what it is. Markets are there to play on your emotions and try and bleed money off you. That's what they're there for. So let's go and look at the macro side of things. So we'll start with DXY. Dollar Strength Index, we're always talking about it, is the ultimate risk asset killer. As we see here, at the peak at 109, Bitcoin was at 19.5k. Since then, we've come down to a low in August of, let's have a look, 104.60, circa that. That was around the 10th, 11th of August. Bitcoin was its local top 25k. Since then, in the last, 8 days, we have seen an incredibly aggressive move on DXY, up to 21k, up to 108, which has constituted this aggressive sell-off in crypto, 21k Bitcoin. DXY has to be respected, and often you get the small window where you can see the DXY move and crypto hasn't responded yet. Sometimes it gives you the opportunity to get out of risk, and it did give us that opportunity this week. But yes, DXY has to be respected. Now, what we're looking at really for next week is we need to see DXY turn around. We need to see DXY turn around to give SPX, give crypto, give risk assets the chance to take off again. Just briefly, this move we've seen in the last few days is essentially the market pricing in FOMC minutes. They think it's slightly more hawkish than obviously they were predicting. I think that's bollocks personally, but that's what the market's saying, which is fine. We have FOMC again on the 20th of September, so it's 1 month away. It's a decent chunk of time, but we have inflation data before that. And as we keep banging the same drum now for the last 2 to 3 months, if we think inflation has topped and we think economic data will continue to get worse, and it has been getting worse and worse and worse, the Fed cannot raise interest rates when the house is burning down around them. You can't do it. The only reason they can do it is if inflation keeps roaring higher. We've seen it move lower last month, relatively, I don't want to say aggressively, but it has moved lower and lower than expectation. If we see another September print lower again, this is going to prove the thesis that we have, that inflation has topped. The Fed then has room to pivot as data gets worse and inflation becomes less of an issue. 2, oil. Oil has been something we've been watching very, very carefully. We called the top at 125, and then we've seen this aggressive. This is just the 2-month chart anyway. So 110 down to where we are now. We're still going down. We're sub $90 a barrel, which is fantastic for risk, fantastic for the positions we're looking at. So that is being a box ticked. So that's great. So yeah, look, I don't want to go in too much more detail on the macro side of things. Everything is still looking correct. Always test your theory, but everything that we've been looking at over the last 2 to 3 months is looking exactly as it should do. This is a healthy correction for equities that unfortunately is being amplified by crypto in a bigger way. You have to protect yourself. You have to have a game plan of how you go forwards, but that's exactly what we've looked at. So I hope that helps, guys. We will check back in again next week. In the meantime, let's get over to the gutter giveaway and announce the winner.
So the winner of this super clean gutter pitch is Anne-Marie. Anne-Marie GG, Twitter handle at Anne-Marie GG3. Congratulations. Send me a DM with your wallet address and I will ping this guy over to you. Guys, as always, thanks for watching. Thanks for listening. Have a cracking Saturday and we'll see how next week pans out.